Oh yeah, baby, welcome back, happy Friday, welcome back everybody to the Blackfire Technical Analysis YouTube channel. Hello, happy Friday, it's the weekend, it's technically early Saturday morning, whatever. I just got off of work, I just came home, nice little early stream to start off the weekend. I do plan on keeping this one quick here today, but I do plan on tackling all the basics and all of the requests at the same time, so I might be a little bit at a higher pace, but nonetheless we have plenty to cover, especially with Bitcoin confirming a lower high, which is extremely exciting for my position, from my perspective. But we're gonna hop right in here, start with the analysis on NASDAQ here today. We do see today's candle closure still below that 21 exponential, and I've been telling everybody that 21 exponential is the main catalyst here for my trading strategy, and the fact that we continue to close below that one is a little concerning. However, we're still gaining a little bit of pressure on that 21 again, so it's always safe to look at both sides of the coins. So I'll go ahead and describe both sides of the coin that I'm looking at here. We do see stochastics traveling ever so slowly up deeper into the bearish control zone, and the reaction of stochastics here today, this is just a show of extremely low momentum here. I do believe this is still a bounce, again, until proven otherwise. Stochastics being very, very, very easily readable here in the lack of bullish momentum. As far from the bullish perspective, yes, we did see a significant price increase, but on what momentum, right? No momentum here showing any evidence on the stochastics right now. I'd be more convinced of momentum if this thing just shot straight up off the low, but we remain in the bearish control zone. And for the RSI perspective here, we remain below the exponential. That is sloped to currently negative at the same time. Yes, we did get that critical read above the 50. Yes, it is tradable. But am I looking at this for a long-term reversal formation? Not just yet. Again, we do have that long-term trend line here that we've been talking about for a long time, to be quite honest with you here on this on the RSI formation. The RSI formation is still valid in my opinion, and we're seeing price action react as as a result here. Same thing with stochastics. That long-term trend line structure here. Technically, this didn't get close enough, but from my perspective, close enough is close enough. It's still valid. The trend line is still holding. So, there are a couple of, different perspectives here to be looking at. Looking at price action overall, though, we're putting pressure on that 21 exponential. I would say confidently that there is a significant probability of price action pushing through that 21 exponential. And if we do see an open and closure back above the 21 exponential, I will look for a test of the current lower high at 15,515 spot 25. The most exact number altogether, to be quite honest with you, but that's going to be the first targeted test that I'm looking at. But at the end of the day, even if we accomplish momentum back above that 21 exponential, I am not convinced of full market reversal until and only until we confirm new highs above this lower high structure right here. Candle closures above 15,515 will definitely convince me that this one is looking at a macro high or low in the formation as a whole, which is definitely arguable, and I would be looking for new all-time highs all the way up to the 1.414 Fibonacci extension. Somewhere around 15,800 bucks would be my first tentative target, again, if we can reclaim new highs in this formation. For now, I have to go with my trading rules, right? I have to stay disciplined. I have to stay what's the word I'm looking to? Not biased, but disciplined. I guess that's the word I'm looking for. I have to stay disciplined on my trading strategies, and as long as price action is below that 21 exponential, I have to tell myself, hey, it's below the 21 exponential. We could be looking at a lower high formation until proven otherwise. I'm still, to be quite honest with you, I'm still looking for downside price action movements. Again, we do have a couple of signals, but these are not strong signals in my opinion, especially stochastics here. This is not a strong reaction on stochastics stochastics here off the lows here. And again, I would be more convinced of that market reversal if stochastics went like ripping through the top side of the bearish control zone, but we didn't. All that price action from the low that we've seen, this is all we got out of stochastics. Not very momentous, not very strong in my opinion. RSI is more reactive towards price action, but nonetheless, we are still rejecting that negatively sloped exponential. So we have a couple of pointers for the bearish perspective, at least at the bare minimum, until we see price action reclaim the 21, followed by reclaiming new highs. And until those conditions are met, I am not looking for the bullish perspective. Again, I could be wrong. I'm not going to sit here and say that I'm always right, I'm always this, I'm always that, because I'm wrong every day. Every day that I do this job, I am always wrong. There's always reasons people could point out where I'm absolutely wrong on my analysis. But from my perspective, this is how I view it, and that's kind of how I'm looking at NASDAQ here today. We're going to go ahead and check out SPY futures. This one actually did reclaim the 21 exponential. So, this is one of those things that says, hey, maybe this is a macro low. And actually, somebody in the chat today brought something to my attention that I do want to bring to everyone's attention as far as SPY futures is concerned. I actually have this diagonal trend line in a different location, but we can tighten that bad boy up real quick to this one right here, and look based off of this, right? Excuse me. We have a lot of confirmed tests on this trend line here, holding as support. And look, we did see the formation break this trend line right now. And yes, while we are above the 21 exponential, we still have the risk. Again, that's why the 21 exponential isn't the only contributing factor, right? I don't just look at the 21 blindly. I look at other, market formations. I look at price action, what price action is doing as a whole. I look at stochastics and RSI and volatility, right? I look at all of these contributing factors to build a case. I can't just say, yeah, it's the best idea to trade the 21 blindly, because that could lead you into some traps here, right? Yes, we are above the 21 exponential, and yes, that does lead me to believe that price action could see a continuation drive to the current resistance at 44.77. However, if we close anything below that, we still have the risk of a lower high formation, right? Yes, that is very true, which is why, looking at the general trend overall, I am paying a little bit more attention to the micro in conjunction with the macro. But from the macro perspective, all of these higher lows here, definitely proving to be a stability for support for SPY futures here, and we did see that fail here. That is a crucial piece of evidence. We also saw it fail on RSI below the 50 read before bouncing off the top side of the bearish control zone. This one reacting a little bit more in conjunction with NASDAQ's stochastics, but still, nonetheless, not extremely momentous in my opinion. So we do still, in my opinion, run the risk of seeing another lower high formation here, and I would be comfortable with saying any closure back below this current support right here at 44.36 would convince me that a lower high call would be printed on the RSI, and I would be looking for a continuation drive all the way back down to this region here at $4,300, right? We have to look at the trend as a whole. We do have our all-time high right here, followed by a low, followed by a lower high, followed by a new low / change of behavior, right? I am still looking at this formation as a change of behavior formation. I am still looking at this formation as a bounce off of new lows, and until proven otherwise, which would be new highs in the formation, I have to run, the probabilities that this could easily print a lower high and a top formation here and continue lower. However, if we do continue to new highs and close above 44.78, I will be convinced that, a push to the resistance of the all-time high is very, very likely at 45.45, and if we close above there, smooth sailing to new all-time highs, the 1.414 being the first target that I'm going to be looking at here. Now, we do have bottom targets, we do have top targets. Momentum, again, stochastics bouncing off the bottom side of the bearish control zone, continuing onwards and upwards. But again, this isn't enough momentum here to convince me that, yeah, we could be going for new highs. Again, I could be wrong. Again, that's why you prepare for everything and expect nothing. I don't want anyone to think that I'm over here just saying, this is what's going to happen all the time, every time. That's not the case. I look at both sides of the coin. I look at both perspectives, to the upside and to the downside, and I determine the best course of action for my trades via the overall trend, via the indicators, and what they're telling me, right? I go off what the evidence is telling me. And right now, evidence is we have a change of behavior, we have new lows, we have a relief rally at the current moment in time, and until we confirm new highs highs, I'm going to be looking at it as such. Moving on to Dow Jones here, same shit. Same shit. Back above the 21 exponential, yes, I would be confident in saying this, excuse me, this is a secondary candle closure back above that 21 exponential, and I will be looking for a continuation drive to this current resistance here at 34,960. Any closure above there, I'll look for the top side of the blue box territory here at 35,150. And again, the same disposition stands. We have a change of behavior, not from a macro perspective, but from a micro perspective. Yes, we have new lows, considerably new lows in the formation. And if we confirm another lower high, I will be looking for even lower lows below this support line here. I would actually be looking for targets all the way down to 33,250. To be the first general target. If we get a lower high formation, right, we could see price action climb all the way up to this resistance here, boom, hit that level with immediate rejection and continue downwards. Or we could see even a test of this here, this resistance, put in a little bit of a double top formation, and then I would be looking for lower price action. And the same disposition applies for Dow Jones here. If we do take out the current lower high, right around 35,450 here, I would be looking for new all-time highs at the 1.272 Fibonacci extension somewhere around 36,280, assuming that we confirm new all-time highs after those conditions are met. However, if we confirm a lower high at this resistance or at this resistance or below this resistance here, I'll be looking for price action to slowly over time trail and traverse downwards. And if we break below 33,960, I will definitely be confident that new lows will be achieved on Dow Jones here with a price target of 33,250. Looking at stochastics, same kind of thing. Well, this one actually looks more momentous with a breach of the bearish control zone. Actually, now that I'm looking at it real closely here, this one actually does have convincing momentum, to be quite honest with you, but we do see a little bit of resistance at that 50 read here for the stochastics. Yes, we are back above the exponential, and the exponential has been forced to a positive slope. The long-term diagonal trendline structure is still very valid. Take it with a grain of salt. Look at both sides, look at both perspectives, and plan for both. Again, I'm not a financial advisor. This is not financial advice. I'm just telling you what I do for my own positions and my own trades. Dow Jones, NASDAQ, SPY futures, basically the same type of disposition here. We're going to move on to DXY, the US dollar index. Nice little bounce off that support here. Consolidation continuation is the only explanation that I have right now. As long as we are remaining within these two horizontal resistance and support lines at 93.56 being the resistance and 92.97 being the support. As long as we see price action remain between those two horizontals here, I'm going to call consolidation until, at the bare minimum, the consolidation phase is broken here. What convinces me that this could be a little bit of a longer term consolidation is that we do see a critical read of stochastics here. Whoa, not yet. I take that back. Not yet. Actually, we're getting close to a critical read. We do see a sharp decline below the exponential on stochastics, and the exponential has gained a slightly negative slope. There is a little bit of concern for that. Not too much, but enough for me to bring it up here. We do see RSI bouncing off that exponential once again. Boom. Right back up. I do like that formation here. Definitely indicative of consolidation as long as we remain in that neutral territory here. And we do see, historical volatility percentile absolutely being crushed into single digits right now. This is definitely indicative of a potentially big move to come. Again, volatility is not indicative of the direction of price action. It has nothing to do with the direction of price action, although you could put together and piece together pieces of evidence and theories for volatility expansion in the direction of the general overall trend. It does not imply the direction of movement. So that's kind of how I'm looking at DXY here. And if we do see a open and closure above the current resistance at 93 spot, we'll just call it 93.55 here, I will be looking for price action to hit the next target here at 93 spots. 93 spot 80 would be the target that I'm looking for, and we do see the 21 exponential at the current moment in time creeping closer and closer to support. Any closure below this support level here, I would be looking for a swift decline to the 92 spot to 78 region. You could definitely argue that as long as we're above the last low here at 92 spot 45, any closures above there still puts the uptrend validation in play, right? If we don't see a change of behavior, we don't see a new low printed or confirmed on price action here, we could see price action dip below the consolidation phase, print a higher low anywhere within this region, and then boom, continue to new highs. But a change of behavior is a change of behavior, and any closure below 92 spot 45, I would be looking for the next low down to be tested at 92 spot 1. So that's it for DXY here. Definitely indicative of a little bit of a boring price action, except for Bitcoin. What is Bitcoin telling us here? Bitcoin, oh shit, dog. Give me a second. Bitcoin, and again, I don't want to come on this channel and toot my own horn. Trust me, I do that to myself enough. I don't want people to know about it. But look at it, it doesn't get any more perfect than this. It doesn't get any more perfect than this formation right here. What did I tell you guys? Nice relief bounce, boom, right here, right? After we broke this horizontal resistance, not confirming it as resistance, actually confirming it as, support still. I did mention, hey, a pull into that 21 exponential is definitely a possibility. I would say price action got close enough to be considered close enough to the 21. More and to the point, we do have this diagonal trend line that we've been mentioning over the past few weeks here on Bitcoin price action here. Used to be tentative resistance here, back here again, and then boom, flipped to new tentative support here, and here, and then continued the rally all the way up to that critical resistance, followed by a decline, another confirmation of support, a lower high, boom, break of structure, new lows confirmed, change of behavior confirmed, relief bounce confirmed. Boom, we got the relief bounce and we hit that diagonal trend line literally perfectly. Not only that, but I was able to enter in another position along the horizontal test of this horizontal resistance right here, which is not support. It is confirmed as resistance. Again, when you look at horizontal support and resistance, you guys, and for this example, we're looking at resistance, right? The initial break of that resistance does not confirm it as new tentative support until, and only until, a secondary candle closure above that region is confirmed. What did we not see? We did not see a secondary candle closure above this tentative support to confirm it as support. What we saw is confirmation of resistance. Boom. Another lower high. So now we have a high, a lower high, and a second lower high. With this price action being the way that it is, I am going to be looking for price action to decline all the way down to $38,200 first. Yes, I would be looking for bounces along that region here, maybe a bounce up to this region at 42,300 before ultimately coming and continuing the downtrend all the way down to 34,900 bucks, give or take a few bucks here. Those are just rough estimates, but we do see this is acting as tentative resistance once again, so I have no choice but to look for price action to revert to the downside unless, again, we have those conditions for the upside, unless we see a complete reversal here above the 21 exponential, at which point we would have a technical higher low confirmed here, and I would be looking for tests of the current lower high, the prior lower high, at 48,350. At which point I would come back and basically wait out price action, see what it's going to do from there. If it's going to put in a little bit of a double top formation within this region, cool. If not, cool, whatever. I have plans for both sides. My first tentative plan, my first two tentative plans, again, this is why planning is so important. When I saw this breakdown, right, I said, okay, we have a change of behavior, so I have to plan for a change of behavior. So what am I going to do? I'm going to layer in a couple of positions, right? So what did I do? I set in a limit buy right here, boom, right along that horizontal resistance level, which wasn't confirmed as resistance, right? This support level. We saw price action divvy all the way down here and then bounce all the way back up, and then I put in another buy, boom, right here. That buy was, that short sell was executed. I also had one when the 21 was up here. I also had a plan for a back test of the 21 at that moment in time. I did see enough momentum to see price action go to the 21. That did not follow through. I have canceled that order. It doesn't matter. What happened? Enter one here, enter two here. Boom, continuation to the downside, lower high confirmed. I am going to be looking for lower lows. I am going to be looking at this as a macro cycle high before in my opinion, year-long bear market to the downside. People might be asking me, hey, Brian, what are your thoughts on, ultimate lows for, I don't care. Doesn't matter. I'm not looking for, price action goals in, the next month, 2 months. I'm looking for price action target goals now. I'm looking for price action to hit the very first level for my take profit, all the way down at 38,000 bucks, even before reevaluating my position and managing my risk even tighter, right? I don't say, it's a bear market. This market's gonna go all the way down to 8,000 bucks. Again, none of this is crystal ball, hopium bullshit, right? I don't do that crystal ball stuff. I try to be as realistic as humanly as possible. I try to look for specific targets to the upside, to the downside, that fit the bill of what the trend is telling me. And the trend is telling me right now, again, I don't have to bring up that Hall 104 moving average to convince you guys that we are likely seeing a year-long bear market for the cryptocurrency market here. And this continuation to the downside could very well be confirmation of that. Now, the possibilities for this to be a macro high or low are there, but again, the evidence is not convincing me. The evidence is not convincing me of that. So again, if we do see a recovery of the 21, I have a couple of targets to the upside. The first target being 48,300, and the second target being this major resistance at 50,000 bucks even. However, look at the reaction the first time we met that resistance. Boom, huge decline to the downside, and that was my tell. Hey, it's probably likely that we are seeing a macro lower high in the overall structure here, and we are likely going into a confirmed bear market. So that's going to do it for Bitcoin here today. I do have Hall of Fame to cover. Let's go ahead and do that one. Nope, this is not support. I want to see if my lines are lined up. Now, let me pull it out. I want to make sure. I want to make sure I'm as accurate as possible. This one's more significant, to be quite honest with you. Yep. So we did see a break above this region here. Not once, but twice, and it is still confirming as resistance. Right? It is still confirming as resistance. We are seeing, a lot of increase in stochastics here back into the bullish neutral zone without any significant price action behind it. Right? Again, when we're putting a case together. I'll give you guys an example of what I want to see, right? When I see a diagonal trend line like this get tested and hold as support, I want to see momentum gain, right? But I also want to see price action do the fucking same thing. I want to see price action do the same thing. And what did I get? I got a lower high. I got a lower high, a micro lower high in conjunction with this lower high here, in conjunction with the remainder of the entire structure. And we are still utilizing the bottom of this blue box territory as tentative resistance. And the fact that we did confirm that as tentative resistance and confirmed a top here, putting a lot of pressure on this 21 exponential. I will be looking for price action to move all the way back down to that $2.85 region here that we've been talking about for quite some time here. Any candle closure below $2.85 will bring back my previous disposition of new lows being confirmed. I will look for price action to swiftly move all the way down to $2.41, especially if we see a closure below the $2.75 low here, which we will mark off. Again, this formation, in my opinion, is inconsequential. It is evidence of fucking nothing. This isn't a true uptrend. This isn't momentous. This isn't exciting. This is boring as shit. We are not seeing, excellent price action. Where we're seeing excellent momentum here on stochastics, we are not seeing price action follow suit and do the same thing. We're actually seeing pressure to the downside still. A lot of green candles, yes, but look at this resistance. Boom, hit that resistance. We did see a lot of pressure on that resistance for a couple of days here, and then boom, just kidding, fuck you. We closed above it, and then boom, we opened below it and continued and closed below it. RSI putting in a top call here, rejecting the 50 read back down, not a good signal. Stochastics carrying into the the bullish neutral zone, not a good signal with the way price action looks here. And I would just be patient and cognitive of what price action is actually doing, right? And price action's not doing shit, in my opinion. Price action is playing with your heartstrings, playing with everybody's heartstrings, acting like it wants to come and initiate a full-blown uptrend, and we do not have that. We actually have a lower high. We have a lower high in conjunction with the previous high here, which leads me to believe that price action likely breaks the 21 first, comes down to $2.85, hits a little bit of a bouncy bounce and breaks that as well, and continues to those $2.41 lows. Again, when I call out a price target, time isn't involved, right? It could happen tomorrow, it could happen next week, it could happen a month from now. We could see this play out as a consolidation phase for a little while. That's why you plan. That's why you plan for everything and expect nothing. I expect nothing. But if we do hold the 21 and bounce back above this resistance, I want to see an open and a closure, right? I want to see a break, boom, closure, followed by a open and a closure above it the following day. That and only that will convince me of price action continuation, potentially to the current resistance above that level at $3.37. I will go no higher than that until I get a candle closure above that region. And we already have the targets to the downside. We have momentum. That's going to do it for the Hall of Fame. What's next? AMC. Still riding that diagonal trend line. Disposition is still the same. I do believe we have a little bit of a consolidation phase opening up, just a little bit here. But again, this diagonal trend line being the main factor here. And we did see an open and closure below this, confirming it as new tentative resistance, which leads me to believe that likely we do see this diagonal structure break to the downside with a potential target of 37.25. Any closure below there, I'll look for new lows all the way down here at 32.13. However, if we revert, the only thing I'm looking at is that 21 at the current moment in time. An open and closure above that 21 would lead me to believe that a potential movement to the current high all the way up at 51.85 is very likely, but not until that condition is met. Again, we are opening closing candles below that 21 exponential, and as long as we are below the 21 exponential, I'm going to be looking for targets to the downside. Not only that, but we are still below that 50 read here on the RSI and going flatline, which means it could go either way, to be quite honest with you. We could see momentum build and continue onwards and upwards, or we could see RSI momentum go to the downside and see downtrend continuation here. Stochastics just absolutely crushed, confirming new lows. Not a good signal. Back into the bearish critical zone. Now we do have a point to consider. A couple of points, I do believe, to consider. Oh, that's not what I wanted. Come on, Brian. This point. Boom. Yeah, we do have a validated trend line here that we are currently basically messing with. Maybe we do blue to blue here, and kind of tighten this up just a little bit. Boom. So we do have 1 test, 2 tests, 3 tests, and looking for a potential fourth test of this diagonal uptrend line here. So, if we do see a little bit of continuation below, it wouldn't be out of the question. But again, that change of behavior, we're on new lows here. So again, at the end of the day, I have a lot of evidence suggesting price action moves further to the downside. And the only piece of evidence that would tell me otherwise is a swift cross back up in stochastics, a break above the 50 read on RSI, and a low confirming here, and closures back above the 21 exponential. So that's going to do it for AMC. We're going to do the requests here. I did say that this stream is going to be a little shorter today. AHT. Let's go ahead and check out Ashford Hospitality Trust. Secondary, we're still above the, oh shit, we're still above the 21. Technically the price target has been met, the price target has been met, the price target has been met, but we are closing below it. With the momentum that we do have built up here, I would suggest that price action continuation through this resistance here is likely. We do have an uptrend confirmed. We have new highs closing on the structure here. This isn't again, this is just like the Hall of Fame. It's not an exciting uptrend, but it's an uptrend nonetheless. RSI though, bouncing off the bearish control zone, boom, back into the neutral territory, looking for a momentous drive towards the bottom side of the bullish control zone. I do like what price action is doing here. We are closing significant amount of candles above the 21 exponential. We have 1, 2, 3 above the 21 exponential, and we do see the 21 exponential sloping back to a positive stature. So I am convinced that we have enough momentum to break through the 15.90 region here and go for that tentative target all the way back up at 17.85. However, if we reject, again, this is arguably a large range right here. Definitely a large range. Arguably, if we reject this region here and continue to close candles below it without seeing that pressure building on that resistance, I will look for price action to move all the way back down to 13.95, and then we'll come back and reanalyze it from there. Not only that, but look at volatility. Absolutely fucking destroyed. Absolutely crushed. So this move here, not volatile at all. I do believe the bearish gas has been lifted, and people are just kind of just buying right now. I don't think any of this movement here is evidence of institutional buyers, moving this stock to the upside. To me, it's evidence that, normal people like me and you are buying the stock right now because it is at crippling lows. So that's kind of how I'm looking at this one. Again, if we do get that, breach above the 15.90 region here, we are looking at a close apex time. We are looking at a very close apex period here. Actually, not even that. This was actually very tight, to be quite honest with you. I mean, I don't even know if I can make a trend line. Like, it's supposed to, it's got to break, right? Seeing the moving average here in single digits is like, it's telling you, right? We can see in the past here, the moving average here in the single digits, followed by boom, right? Moving average in the single digits here, followed by a boom. Moving average in the single digits here, followed by a boom. Let's look at that in relation to price action. Obviously, those booms in volatility not only sucked as far as bullish momentum is concerned, they've mostly been bearish momentum here. Every time we've seen the volatility expand to the upside into that 100th percentile. So it is, it is kind of one of those questions like, if this breaks, will we finally see a bullish expansion of volatility to the upside? It is something to consider, but again, we could easily see this reject and then see a huge expansion of bearish volatility to the downside, right? So plan for all of it. Again, we do have we don't have that many conflicting indicators that suggest this is coming down. We actually have a lot of indications here, piecing together, building a case for the potential movement to the upside, except that volatility. And that volatility has been crushed for quite some time, which tells me that an apex climax period is very, very near. When will that be? Can't tell you. Again, this isn't a crystal ball. This isn't crystal ball. I'm foretelling the future bullshit. All that volatility tells me when it's crushed is that, hey, something is likely to move violently soon, right? And especially when we're hitting 5 reads and 0 reads. Currently at a 0 read on the last closure here. It could go boom, boom, boom any minute now, to be quite honest with you. So that's how I'm looking at AHT here today. I'm going to move on to the last request for the day. I did cover Bitcoin, Dow Jones, SPY futures, NASDAQ, Bitcoin, AMC. I think I said the Hall of Fame. Yeah, I did mention that I was going to keep this stream short here today. So we're going to move on to MMAT. This is going to be the last one for the day. This is ranging. This is a consolidation period here. And the disposition remains, you guys. What I do like, though, is that we're above the 21. We're consolidating on the 21 and above the 21 while we're seeing momentum oscillators, especially stochastics, cool off. Right? This is indicative of a potential cool off here before a heinous, absolutely catastrophic bullish movement to the upside. But again, I have to see evidence, right? We could just as easily break the bottom side of the formation at $4.82 as we could the top side of the formation here at $5.27. I would be confident in saying if we close above $5.27, an open and closure above $5.27, I would be looking for new highs. I would actually look for this resistance at 570 to get completely shattered and continuation all the way up to the $6.80 region. However, if we close below this support line here at 4.80, that would be in conjunction with a closure below the 21 exponential, and the target is extremely low here at $3.85. RSI, again, indicative consolidation, a lot of chop here, top, bottom, top, right? Consolidating on that exponential basically flatlined. It's up to price action. It's up to the bulls or it's up to the bears to push this price action one way or another. And once that piece of evidence is given here, again, the range, the top side of the range or the bottom side of the range, once that piece of evidence is given here, we could potentially be talking about a legitimate juicy trade either to the upside or to the downside. So that's going to do it for today's stream, everybody. If anybody in the stream is new, hit that like button, hit that subscribe button, tick that little bell. Thanks for supporting the channel. Thanks for supporting the cause. I appreciate everybody that watches the streams and takes time out of their life, out of their day to view my content. It makes me feel extremely valued and appreciated. So I want to show you guys the appreciation for that as well. And that'll do it. Until next time, everybody, you know what it is. I'll be back Monday. So stay safe, stay happy, stay healthy. Mother truckers, love y'all. Peace.